Okay, good morning. Oh, actually, it's afternoon here in the beautiful state of Utah. Good morning to wherever you are tuning in from the world. Um, I've streamed live this on our American Average America. So do put in the chat where you're tuning in from. We love to hear from all our partners around the world where you're tuning in from. This session is specifically for those people who live in America, and there's quite a lot of confusion around this topic, especially when you're dealing with taxation, and especially around regulations around the crypto. Now, there's a lot of different information out there, but it's also good to also have this information, uh, you know, get yourself educated and making sure that you're doing the right thing, because this is one thing about the cryptocurrency era, is because this is the people's money, the people's uh, currency, and lawmakers try their very best to try and regulate the Bitcoin for quite some time. And so there's different information out there, different states, different federal bodies of federal lawmakers. They come up with their own take on what's taxable, what would be the best option for crypto to be under. So this is not a recommendation, or it's just just information to share with everybody on how this taxation works around the crypto scenario. Now, um, the US tax guide for crypto, for those people, I usually ask this question: if you purchased, let me quickly just share this. There's a if you know that you purchased, that you bought, that you sold or use or trade crypto, so if you did all of that, then you definitely may owe taxes. If you are if you are a USA taxpayer. So here's a look at what that could mean to you, the steps you may have to take, the forms that you need, and how gains and losses may affect your taxes. Okay. So first and foremost, I just wanted to quickly introduce myself. My name is Nelly. I'm on the USA Local Leaders Council on our USA team, also manager under our affiliate Average MLCI program. I also have passion in blockchain as well as crypto. I've been involved back in 2016 in crypto and learned a lot about it, and through this amazing technology, blockchain. So it's not just blockchain, it's not limited to crypto alone, but it is open to other venues for other different industries to adapt and to adopt. Also an entrepreneur. I'm very, very proud to be a network marketer and, have the presence online and being able to build business, to be able to, to do something that I'm passionate in, rather than being able to look for a job and and go and work for a 9 to 5 job, and being able to work under somebody else's control. So I love being an entrepreneur, and as an entrepreneur, a lot of people think it's easy, but it's not. But it really does come down to how strong you are, how willing, how determined, how passionate you are in being able to, to create something for yourself, right? Also, an empire builder. I recruit, I bring in people that I know we have the same mindset, same values, same mission and goals in life. And so we run together as a team, and nobody gets left behind. Also, an investor. Um, I diversify my portfolio around different assets, different instruments of the market, different segments and sectors. And I'm also very, very proud to be a private investor of a global portfolio that we have under our crypto unit program. I'm also a mentor. I'm so grateful. Uh, being involved in network marketing, it takes a lot of guts. It takes a lot of strength and bravery, and confidence to be able to, to write this out, because not everybody holds the same confidence when you're doing something on Facebook, on social media. People will judge you. People will either cheer for you or cheer for you to fail. And so it's very, very important that we take our personal development, take you know our self development on a higher scale, because you need to be strong. You need to have a lot of grit in order for you to continue on with these, with especially when you're doing the network marketing and being an entrepreneur, so that nobody so when you run into a problem, when you run into rejections, when you run into things that you cannot handle, at least, mentally you are strong enough to be able to handle any rejection, anything that comes your way. So so mentoring came. It wasn't. I wasn't told. I wasn't given the education on it, but it naturally flow through because of the experiences that I go through, in terms of leading, in terms of serving, people. So mentor to me is so important, because there's a lot of people out there who also need that motivation and that, quick kick, so that they too can be able to grasp the power of grit. And so I'm very, very grateful to be a part of this opportunity and being able to educate and to share a little bit of value with our partners around the world. Now, our agenda for this morning, I see, hi everyone. So our agenda this morning, we're going to go through, we're going to find out um, if you have to pay crypto taxes, the steps to take, determine if you owe crypto taxes, calculating your gains and your losses, consult a tax professional, prepare your forms, file your taxes, the resources and extra information, the official IRS guidance, stablecoin, as you all know that we do have one, and also some of the important terms that you need to align yourself with and get yourself used to it, because those are the terms that you will be seeing more of it when you're doing your taxes around crypto, and also the relevant tax forms for you to really, really understand more on this. Okay, now I'm going to ask you guys a quick question. Do you have to pay crypto taxes? And of course, this is the $1 million crypto question that people have been asking. If you do you pay taxes around crypto? Of course, yes. Now, there's a lot, like I said before, there's a lot of conflicting content out there, but make no mistake, you are required to report gains and losses on each transactions, or when you earn cryptocurrency, even if the gain or loss is not material. Okay, the IRS holds you and I responsible for reporting all income and transactions, whether you receive a tax form from a crypto exchange or not. So it's very important that you look out for this tax forms at that period, the taxing period. Exchanges like, usually for myself, I personally use a lot of Coinbase, because it's, for me that, Coinbase is one of the top exchanges here in the US, and it's, it went public, and a lot of assets are being, a lot of assets have been launched onto Coinbase. So, and I love Coinbase also because it's got a very a great process where if you need to, have all of this information with in terms of taxes, they can have that transaction list available for you. So exchanges like the Coinbase that I use make transaction history available specifically for the tax purposes. Now, one quick note, if you're a non-US investor, taxes on crypto are treated differently in each country to country. Okay, so this guide only covers the US requirements unless you happen to have some US tax obligations, which is rare, but be sure to consult your local country tax advisor to be able to confirm your tax reporting obligations at your home jurisdiction, okay? So remember, each country holds different policies and regulations around the taxing part, okay? Especially when it comes to crypto, because this is all new for some of the lawmakers and governments. And this is one thing I love about cryptocurrencies because, of the freedom that we have, eliminating any laws around it. Governments have been trying their very best to regulate cryptocurrency, but they're offering different information on it. Now, in a nutshell, all crypto sales, conversions, payments, donations, and earned income are reportedly by US taxpayers, okay? Now, buying and selling crypto is taxable because the IRS identifies crypto as property, not currency. Okay. Now, this is the information from 2019. They're classifying crypto under as property, not currency. They still need a lot of work. They still are meeting and trying to find out a solution on how to best fit crypto, because government, they do not want they see crypto as as a threat. And especially when it comes to our Federal Reserve, they're all about cash. They're all about, the dollar value. But this is so new to them, taking the world, by storm, especially with the wave of Bitcoin. And so right now they are still negotiating. They are still looking at around different ways to still really, really get down to the bottom of it and regulate currency. So as a result, tax rules that apply to property, okay, tax rules that apply to property, but not real estate. So make sure, of course, real estate, housing is under property, but this is a different kind. Applies under the property, not including real estate tax rules, transactions, like in terms of selling collectible coins or vintage cars that can appreciate in value. So this kind of identifies this kind, the IRS put crypto under the property where they see it as an asset or things that produce and appreciate in value long term. Okay, so this applies to Bitcoin, Ethereum, and all other cryptocurrencies out there. Now, the IRS isn't kidding around. Failure to report income, including income from the sale of crypto, could result in IRS levying penalties. So starting with 2019 tax returns, the IRS requires you to answer yes or no to a question about whether you had any crypto transactions during the year. So I remember when I did my filing last year, and I see the new question of cryptocurrency coming through. So I guess, they really, really wanted to at least tax, or at least, get some control around it. I'm not a fan of that, of government and law regulating, but it is something that, they will always try to get their hands on. So always consult with a tax planning professional regarding your own individual reporting obligation. But for those of you who are using TurboTax or QuickBooks or whatever kind of avenue that you're using to file your tax, or with a tax agent, it's pretty much straightforward. All you need to do is answer those questions. You don't need to go through. It's not hard. Because everything is well prepared for you in there. All you got to do is supply the information that they're after. And also the exchanges should also send you those forms, which we'll be touching later on this in the slide. So with all that in mind, this is a list of steps you can take to help you understand that if you may need to pay crypto taxes, how to determine the amount, and what forms you may need. So let's quickly dive in. These are the steps to take. Determine if you owe crypto taxes, okay? Even if you're in the just hold it camp, it's worth evaluating your crypto transactions to determine if you may owe taxes, okay? So what's taxable? In short, a lot. So here are some examples. I'm gonna give you guys some examples on what is taxable in terms of the crypto events that you have. Now, what's taxable is if you were selling crypto for cash, okay? Everybody or anybody that's been selling crypto for cash, I also do that. When you need cash, of course, you need to sell out some of it so you can liquidate it to cash. In other words, realizing the gain on your crypto property. Don't forget losses could help with your tax bill, okay? So if you had a gain, of course you're going to get tax on that. If there's a losses, then you're not going to pay, but at least you need to declare it, okay? Now, paying for goods or services, that is taxable. For example, you go out to a store and you take out your PitPay Visa card, or any other form of Bitcoin Visa card, and you pay for a pizza, you pay for a dinner or goods or products, then you're paying for those services and products. So of course, you're going to be expected to pay tax on that, okay? Another one is buying one crypto with another crypto, okay? Or converting one crypto into another, all right? Using Bitcoin to buy Ethereum is considered a disposition of the Bitcoin, for example, okay? Or in other words, swapping, okay, or converting to another, okay? So know that that is taxable as well. Receiving mined crypto, including Bitcoin, Ethereum Classic, and all other cryptocurrencies out there. So if you have been receiving mined crypto, then that is taxable as well, okay? Another case scenario that you're going to be taxed on is being paid in crypto or by airdrop. So if you're in a platform or if you are investing in something and you get paid in crypto, that is considered as income. So when you're paid in crypto by an employer, your crypto is classified, has compensation, and will be taxed accordingly to your income tax bracket, okay? So kind of like a W-2 form. And also another is receiving crypto rewards, including staking rewards and interest earned. So all of that will be under taxation, okay? So transactions must be reported at their fair market value as measured in the US dollars. So if you bought pizza with Bitcoin, you would definitely have a disposition of the Bitcoin equal to the cost of the pizza at a fair market price in dollars, okay? Now, airdrops, for those people who are not familiar with airdrops and tax implications, if you receive free crypto through an airdrop, how the crypto is used will have an impact on how it is taxed. So airdrops are like free money received in a giveaway or in a lottery winning. So they should generally be taxable as ordinary income valued at the fair market value on the date of the receipt. So if it's sitting in your wallet, but Coinbase or any other exchanges has not yet started supporting the protocol such that you can't do anything with it, it's not taxable yet. Okay, crypto received in a fork becomes taxable when you have the ability to transfer, when you have the ability to transfer, sell to the exchange, or otherwise do something with it. Okay, so more of this airdrops, tax implications, and crypto received from forking. You can find that on our IRS FAQ. question 21 to 24, and also in the Rev Rule 2019 to 24 for IRS guidance on forks and airdrops. So more of that information in there. Now, what's not taxable? Okay, I love this part. So what's not taxable, okay, is when you're donating crypto to a qualified tax exempt charity or nonprofit. Now, before you do any donation to any of that, make sure those charities are exempt and are nonprofit. So another great example would be these guys here, givecrypto.org. That would not be taxable if you're donating it as a gift, or as a gift to someone else as well. Another option that will not make you taxed on crypto is buying crypto with cash and holding it. So if you're a hodler, if you're hodling, your Bitcoins, your Ethereum, our WCRU, our Crew, and whatever kind of crypto, there's no gain or loss recognized if it is just held. Okay, so all those people who are hodling, don't worry about it. It won't be taxed anyway. Okay. Another good thing is transferring crypto between wallets. So if you make sure that you check the transaction records of your exchanges to confirm they're not recorded as disposition. So when I say disposition, make sure that you are not swapping, okay? They're not allocating it under, like you're converting it, but you are just transferring it across to other wallets, okay? So that's not taxable. Transferring crypto between Coinbase accounts or from an external wallet to a Coinbase account. For example, like with Coinbase to Coinbase Pro, that is not taxable as well. So that's good because we're not even using our cryptos. All right. Now, so if you have crypto transactions to report, first, you'll need a single view of all your crypto related transactions, each of which should be reported on your tax return. Charitable contributions and gifts of crypto and tax implications, recipient of a gift, right? You are lucky enough to receive crypto as a gift, you are not likely to have a tax. So any crypto that was sent to you, but it's a gift, that would not be taxable, okay? Until the time comes that you decided that you wanted to cash that gift out, then you would be liable to pay tax the same cost that that person who gifted you that crypto, right? Person who gives the gift, you can gift crypto up to 15,000 per recipient per year without paying taxes. Okay. Now, if your gift exceeds over 15,000 per recipient, then you are required to file a gift tax return. Okay. Charitable donations, if you give crypto directly to a 501 charitable organization, you can claim a charitable deduction equal to the fair market value of the donated cryptocurrency. Okay, so if you're going to file this claim, make sure, don't expect that you're going to be earning more. Okay, but you're going to be getting the same market value as that of the price of the crypto that you donated at the time. Okay. Now, I personally use Coinbase. So all of those people who are on Coinbase, you can generate reports with all your purchases and your selling, the send and receive of all crypto associated with your Coinbase account. But please remember that these reports only details transactions associated with your own Coinbase account and will not be correct if you moved crypto from other wallets or exchanges, as Coin doesn't have information about your holdings on other exchanges and platforms. So for example, if you are with a Binance exchange or another there's Bitmart exchange, don't expect Coinbase to generate a report for you on those exchanges. Those are separate entities, so you got to go back to those exchanges and get those histories of transaction with them. All right, so for all the transactions, you need the cost basis of each transaction, or in other words, the amount in dollars that you spent originally to buy it and the amount in dollars it was worth when you sold it. So this will be used to calculate your gains and your losses, okay? Now, consult a tax professional. Now, this information, like I said, this is just a general view. I'm not offering you guys on what or telling you guys what to do or recommend it, but this is just general knowledge of what I know surrounding the crypto. But it's always good to consult with a tax professional, who has more to offer and more knowledge on these things. So, but the thing is, we are go-getters and we are DIYers, and a lot of our customers are the same. But paying taxes on Bitcoin and other crypto is complex. So if you are still in doubt, so always good to check in with somebody that has tax, who's a tax expert. Okay. This education guide, is just preparing for general information, and hope that, it will just kind of give you that, information on how you can deal with your taxes. I know right now, with the cryptocurrency emerging, and we're seeing a lot of people turning to crypto, I see a lot of cash burning up and switching to crypto. So it's always good to be prepared and have this knowledge in order for you, because one day, if you're not paying your taxes, especially with this government trying to regulate what the freedom of people to have this, it's always good to be on the safe side with the law. Okay. Now, the implications of hard forks and tax obligations. If you received free crypto as a result of a fork, your free crypto will be treated like free money received in a giveaway. So it would be taxable as ordinary income, valued at the fair market value on the day it is received. Very unfair. The fair market value is the amount someone would pay for the crypto on the date of receipt. So it's always good to make sure you remember your passwords when you're logging to your wallets, because you can't just record. The receipts are already in the history of your transactions, because it's internet money. It's our money. It's the people's money. So if it's sitting in your wallet, either whatever exchange that you chose to have, or in whatever wallet that you have, and you have not started support, and those exchanges have not supported the protocol, and you can't do anything about it, so it's not taxable. Okay, not taxable yet. So crypto received in a fork becomes taxable when you have the ability to transfer it out, to sell it, exchange it, or do anything like that. Okay. Now, preparing your forms, okay? Now, these are some of the forms. The Form 8949, these have transactions that qualify as, if you have the transactions that qualify as a capital gain or loss, those will go here and be filled out using your transaction reports from various exchanges, okay? Form 1040, this is Schedule D, capital gains and losses, commonly referred to as just Schedule D. This is the summary of your capital gains and losses. Form 1099, miscellaneous income. This form is used to report rewards and fees income from staking, earned in other such programs if a customer has earned 600 or more in a tax year. Now, if you are an American taxpayer living overseas, if you are definitely living outside of the US, you'll want to check to see if you've received all of the forms that you need to file your tax return. Just in case, make sure you have detailed transaction history reports that reflect all your purchases and sales across all the exchanges that you've been using. And if necessary, you may have to contact your exchange directly. Okay. Now, for me personally, I use about 5 exchanges. So that is something that I had to really keep a close eye on when tax year arrives. I'm able to generate those reports, from those exchanges. Okay. Now, filing your taxes, you've got all of your transactions. You know your gains and losses. You've consulted with a tax planning professional, and you have your forms ready. Now, with everything that we've covered so far, now you're ready to file your taxes. So you're probably ready to file them. But it doesn't hurt to check in with any experts last time. And congratulations, you have come to that point where you're ready to definitely file. Now, some of the resources and extra information, you can find majority of the information on our official IRS guidance. Be in the know about what the IRS says about the taxation of Bitcoin and crypto. It's worth reviewing and understanding their guidance from 2019, their cryptocurrency FAQ, and also the publication 544. So if you go on their official website, make sure to be on top of it, bookmark it so that you can always go back there, because I know surrounding crypto, it's very, very fragile at the moment. And so they they will tend to bring out different rules, different regulations and laws surrounding it. So be on the know and be at the forefront of this. Okay. Now the stable coin, if you hold a stable coin such as USDC, USDT, or USDU. Now, remember, guys, USDU is our stable coin. Very, very super, super proud of it. That is valued at $1. So, and you bought it for exactly the same amount, you have no gains or losses when you sell out of that stable coin. So if you are selling out your USDU, okay, that is not taxable because it is equivalent to $1 USD. Okay, so technically stable coin transactions are taxable and still reportable. There's no gain or loss to claim on it because it just represents the exact value of the USD dollar. Okay. Now, some important terms that I want you guys to understand on is, while you're in the process of preparing your tax forms, you'll be able to run into some, which is a lot of technical terms. So I put this together, some of the terms that I know will come up, on a regular basis and that you need to understand. Now, capital assets is the property of any kind that you own, including stocks and bonds, a home, and crypto. So it's any assets that gives you capital. Okay. The cost basis methods, your basis is the cost in dollars that you actually paid for crypto when you purchased it, adjust for any related costs. So usually this cost basis method is usually the kind of payment method that you used to pay for those cryptos. Okay. There's no standard guidance from the IRS on how to apply your cost basis to individual sales or exchanges of Bitcoin, Ethereum, and other cryptocurrencies. We've seen these common approaches in addition to the many others out there. Now, there is what we call FIFO, which is first in, first out. This method assumes that the first assets you purchased are also the first assets you sold or exchanged. Your gain and loss is calculated based on the price that you paid for the oldest assets in your portfolio. Okay. So, and the asset price at the time of sale or exchange. This is the most common approach for traditional investments. All right. Now, we also have what we called LIFO, or the last in, first out, what we call the SPEC ID, or the specific identification. The SPEC ID relies on investors to specifically identify to their tax professional that the assets that they sold or exchanged. The LIFO is one programmatic strategy that assumes the last assets you purchased are the first assets you sold or exchanged. For any of these approaches, you'll want to consult a tax profession. Okay, so it's have a screenshot of it, reread it. You'll get it because it's pretty much straightforward. Its meaning and have your way around it. You create your own strategy and see which works best for you. Okay. Now these are, like I said, you need to know these terms so it's easier for you to understand what you're getting yourself into. The fair market value, this is one common terms that you come across, especially in the estate industry. Uh, for tax purposes, the fair market value of crypto is the dollar value of the crypto at the time of a transaction. So it's just the same as, you know, when you, the value of your car at the time, when you are purchasing a car, it depreciates straight away in value. It doesn't appreciate. So it will go as well as the house. If you purchased a mortgage, of course, it appreciates in value, but that depends on the market, okay, the housing market. So you look at that fair market value when you're appraising something to the value at that time. The gains are the profits you make on the property. These gains are unrealized if they're on paper. So for example, if your Bitcoin has increased in value, but remains in your possession. Okay, that is what you call gains are unrealized on paper. Now, when you sell your property or when you sell your Bitcoin and receive cash of value, now that is a gain. The gains become realized and you have a taxable event, right? So when you what do you call it? When you have Bitcoin, when you're holding, when you're storing Bitcoin away, and the value increases, that's unrealized gains. But if you sell your property or your Bitcoin and you gain value from it, that's realized gain. And of course, it will be taxable. Like kind property in crypto, there are plenty of questions around whether or not investors can claim a direct crypto conversion. For example, like Bitcoin to Ethereum has like kind, avoiding taxes on those transactions. The tax laws changed beginning in 2018, and like kind exchanges are only applicable to real estate transactions. Okay, so it's good to know all these terms so you know. I know some other properties, some real estate are now accepting Bitcoin crypto. So this will be coming through like kind property and crypto around that area. Long-term versus short-term gains. If you've sold a capital asset, okay, you need to determine whether the asset was long-term or short-term. Now, you guys have all been educated well enough in the 8 rules of private investor, you know, our education in our Academy for Private Investor. You'll know what this means. Short-term, medium-term, and long-term. Long-term means that you held the asset for over a year or more, much longer than that before selling or disposing of it, while short-term applies to assets you've held for less than a year. Long-term capital gains are often taxed at more favorable rates than short-term capital gains. So it's always good to have long-term, okay? Now, losses occur when you dispose of your property for less than your cost basis. Okay, so if your crypto is a capital asset under the definition above, you can use a capital loss on that asset to offset capital gains from other assets for that tax year, okay, or plus 3,000. Okay, so make sure you have all of those receipts, have those on file ready when these time comes. Now, ordinary assets include things like inventory and stock in trade, or for example, the goods and services that a business sells day in and out to its customers. Okay, inventory and property acquired in a trade or business. Okay, if you think you own crypto as an ordinary asset, consult your tax professional. Now, the proceeds, generally, proceeds are the money you received when you sell your property. If you sold your crypto for dollars, the amount of money received is obvious. If you sold your crypto for a different crypto, okay, or you converted one crypto into another, then you must determine receipts by reference to the dollar value of the crypto that you received at the time of receipt, okay? So gains are computed as proceeds minus your cost basis or what you paid for the original crypto. Okay. So the relevant tax forms, like I mentioned before, but I'm going to just quickly go through a little detail on it. Form 8949, a majority of investors own crypto as capital assets and use sales and other dispositions of capital assets, Form 8949, to report all their individual crypto transactions. So here, an investor describes assets transacted, including the dates they acquired and sold it, how much they made, the cost of doing the transaction, their net gain or loss, and if it was short or long term. So Form 8949. Form 1040, Schedule D, capital gains and losses. This form summarizes your total short-term, long-term capital gains and losses from your Form 8949 up here, sales and other dispositions of capital assets. Form 1099, miscellaneous income. This form is used to report rewards, fees, income from staking, earn, and other such programs if a customer has earned 600 or more in a tax year. All right. So that is one of the important terms. And of course, that brings us to the end of this quick detail a presentation, just to really set you at ease, your mind at ease when you're wanting to know further on what crypto is. But other than that, if you do have any questions, do feel free to reach out or put it in the comment, or reach out to me personally. But other than that, go through your screenshots. The recording of this presentation will also be uploaded to our YouTube channel, which is our Average America. And if you want to go back and go through this, watch the replay, you're most welcome to do so. But till then, we will definitely host more of this, and we'll see you again. Thank you for joining me. Grateful for all of you watching on our Facebook Live. I hope you got some value today, and we'll see you again. Bye.